Okay, let me share my screen. Hope you can see my screen now.
Yes, sir.
Okay, no problem. So we'll be doing more of backtesting today on GU, and I'll be using a bigger time frame so the thing will be more faster. But by the time we are done with today's training, I'll give you guys an assignment to go do a little bit of backtesting from where we will stop today. So you guys will just do it and submit. Okay. Okay, so let's just get started. So I clicked on this replay button here. So let's just look for a place to start from. I'll cut it from here. Okay, let me shift this screen. Okay. So first thing we'll draw on our chart is what? Psychology level. You all know psychology levels on good. Remember, this is a weekly time frame. I say it's a bigger time frame, so we are doing it here. We are using bigger time frame to make it faster. Because if we are going to the 15 minutes, the chart will be much. You can see now this is 1995 here. So we are going way back. So if we are using the 15 minutes, it should be more slower. So I'm using the weekly. So if I give you guys the assignment, you also continue from the weekly where we stop. Okay. Remember, I used this function play. Then I looked for the place I wanted to backtest from. Okay, now let's start plotting the psychology level. Remember, it's a random number, a whole number. You can see one year, 65,000. Remember, it's a bigger time frame, so don't get confused. It's not 50-50 pips. It's a bigger time frame. Hope you understand. It's a bigger time frame, so it's not 50-50 pips. I'm saying it again. It's not 50 pips. So I'm just trying to make it fast so the recording won't be big for people that wants to watch it later on, maybe later. Hope you guys are hearing me. You can hear me?
Yes, sir.
Okay, no problem. Nice. We didn't know what psychology levels are. So this is mainly GBPUSD. Okay. Okay, so now after plotting the psychology level, we won't be doing this in high and low of the week. Remember, this is a bigger time frame, it's a weekly time frame. High and low of the week works more on 4 hours. So we are doing this backtesting on a bigger time frame, which is weekly. So we can't plot high and low of the week here on this thing, GBPUSD on this weekly time frame. And again, why I'm not using it again, because this method also we can use it on gold. So gold, high and low of the week doesn't work more on gold. So let's just use three confluences, which is trend line, psychology level, and pure chart pattern. And sometimes we can use this in support and resistance, which is previous support turns to resistance, or previous resistance turns to support. I will explain everything here. Okay, so let's look for the trough and the peak. Okay, you can see a touch here, a touch here, and a touch here. So let's just cater for this touch here. Okay, you see 1 year, 1 year, and 1 year. Yeah. Okay, so now hope you guys understand why I draw these trend lines here. It must, for a valid trend line, it must have at least 2 peaks or 2 troughs. Hope you understand. Okay, so now we have gotten psychology level here. We've got trend line here, trend line bounce, right? Please just follow up so I can know if you guys are hearing me. Can you hear me, guys?
Yes.
Okay. So we've got psychology level here. We got trend line bounce here. So now what are we looking for again is now chart pattern. We are looking, the kind of chart pattern that works more on GBPUSD is either W or M pattern. So At the downside, the bottom side will be looking for a W. At the top side, we'll be looking for more of M like this. You can see it here, like M, okay? So now let's just play and see how it plays out. So this is just one, let's see this as the first leg of the W. Here should be the neckline. Then we should be looking for another candle to form here to make it complete, like a full W like this, like something like this. First leg, second leg. I don't know where it will stop, but I'm hoping it stops at this psychology level, then comes either down here to test this place to make it a double bottom, or somewhere here, or even an extension before shooting up the way to this place. So that's what we are looking for. This is a clear W pattern, okay? So let's just play it and see and watch it plays out. I will have to mute the person talking, so we have a clear chat. So I don't know whose speaker is on. Let me mute everybody first so everybody can listen to me. Okay, so now let's play the chat and see how it works out. Okay, so we already moved. The market is open now. We are using only 3 conferences. So we have gotten psychology level, yeah. We've gotten trend line bounce. So we are waiting for the third leg to form a W for us to enter for a buy at this level, yeah. So we are looking for a buy at this zone, yeah, all the way to this level, yeah, or above to this point, yeah. Okay, so let's see how it plays out. Okay, let's watch. Yo, so I've seen a leg now. You see what happened here? Test touch here. There's another touch coming here to test this zone here. So this is a zone now. It's creating double bottom here. Double bottom, which is also like first leg of the W, the neckline, second leg here. So this entry now is risky, this particular entry. So let me explain it. For those looking for sniper entries, this is the place you can cash your sniper entry at this level here. This level here. Now the market is not okay. Let me say yeah. Then our stop loss should be a little bit below. Let's say below this point here. It should be here, but since this is a double bottom, so we should look for the next previous low, which is here. Okay, so our take profit is here. So it's 1:4. We are risking 1 to get 4. So let's say we are trading $100 accounts here. So we are risking, let's say $10 to get 4. That is 40. We are risking $10 to get 40. I won't deal on risk management on this video. So we just do pure price action. Then maybe on the next class we'll deal on risk management. So we are risking $10 here on a $100 account to get 4. So to get 40. So if this trade goes in our favor, we'll be closing out with $40, which is we'll make our profit 140. Okay, so let's just see how it plays out. So this is our first entry, like a sniper entry. I will show you where it's a secure entry for us. Let's say those that are afraid, I don't want to lose. This is a safer entry. Now, why did I say this is a safer entry for those that are afraid? Now, this is the neckline of the W. If you see, the first leg came. This is the neckline coming to create another leg now. So this neckline, if this market should come up to break this neckline, that is a safer entry, then it's not going back. If it's going back, it happens once in a while. So let me say in a week, you can only have like 1 losing streak or 2 losing streak. And you know, if you have even 3 losing streaks in a week and have 2 winning streak, that 2 winning will cover up your losses times 3 or times 4. So this a safer entry to enter a market is either when it breaks this, the neckline. I'll still use another pattern. Now this is a W, first leg, second, this is the neckline coming down to create another W. So here now is the neckline. If the market should come up now and break this neckline, then it's going up. But if it should come now, play here, come down, then it's not going up again. It's retesting to go down, to shoot down. So now, so the safer entry will be to enter here. So now this is a second entry. This is a sniper. The first one is a sniper entry. Then for those that are afraid, like Ebere, you said, okay, not Ebere, Rich for me, you said sometimes you're afraid to enter the market. So this is a trade that will more favor you entering at this point here. Then your stop loss should be a little bit below this trend line, because if you should break this trend line going down, then it's an invalid trade. Then our TP should be at this level here. So here now it's 1:3, and this one is 1:4. So here it should give us $40. Here should give us $30, making 70. So now you see you can flip a $100 account with just these two trades now. Okay. So now let's see how it plays out. Okay. So let's play it out. This is our first entry. This is our second entry for the safer. For this is for the sniper. Okay. Let's go. I was speeding it up so everything works fast. So now the first one is in. So now we see this market has started playing. Now watch the second enter now. Okay. This is the neckline. Why the market is playing here now is because this is a neckline. This is you see, here was a previous support zone, previous resistance, turn to support, break inside, turn to resistance. So that's why the market is playing at this zone. So now if the market should break here now, then it's a safer entry for those that are afraid to enter the market at once. Okay. So now let's shift it a little bit. So now we have the first one is in profit already. The second one now about to enter. So we have entered with the second one. So now, okay. So now what do we see? Trend line, W formation, and what again? Psychology level. Boom. Our TP has been hit already. Pause. We've hit this in TP already. The first one closed in profit, the second one in profit. Now, here again, you can see there is a trend line here. There's a trend line here. This thing is fast, so I'll have to reduce the speed so we can follow up. This is fast here. So you see, first one has hit the TP, second trade hits TP2. So with these two trades now, with $100, you have made $70 with proper risk management. If you are risking only $10, so here now we have locked in $70. And if it should go against us, the first one should be minus $10, second $10 is 20. But if this one should go against, then this one won't trigger because this one is still up, way up. And some of us want to only have one trade open, not two at the same time. But for aggressive traders like me, we enter 2 times. Okay. So now at this point here now, if you see above here, let's shift this trade here. We know what happened. Yeah, the second one, let's shift it. So the two hits TP. Sorry. So the two hits, this one hits. So at this point now, you see a M pattern here. You see the first leg came down. This is the neckline. Went up again at this trend line here. It touched it here. Went up again. Create an M. If you go to this line chart, you will see here now. You see the M now. Correct. This is a double top, just like here was a double bottom, a double top here. So this is an M formation to shoot down. So the thing was fast. We would have entered a trade here as that doji candle closed. This doji candle here closed. So we would have entered a trade for a sell here because one, psychology level, trend line bounce, M formation showing, which is a double top to shoot down. Would have shot at this point for snipers. Have shot at this point. Then now take notes. This is an uptrend, so we look for more of buys. We don't trade against the trend. So now where is the place where market reacts more? This zone here. So our CP should be here. We are scalping. You see the trade I entered today, I closed that very early because the overall trend was uptrend on gold here. So now this is a place where market reacts most. So this way the market might turn back. So our TP should be here. So this should be 1:1.7, but the minimum should be 1:2. But this one is for scalpers. So I just scalping. The overall is what a buy. Okay. So let's continue. Okay, since we missed that one, let's just continue. Okay, so TP hits on that particular trade here. Okay, so let's see what market have. You see now the market is now turning from that zone there. That zone is very sensitive. It's very sensitive. That's why you see sometimes we can put our TP and the market does turn from here and go against us. So we need to look back first to see what really happened at that area, why the market is turning back. Okay. So we've closed that now. Now note this zone, this particular area now. I don't want to talk more on supply and demand. support and resistance. I just want to use these three conferences: chart pattern, psychology level, and trend line bounce. So this for maybe later when we have moved from this, graduated from this level of understanding, we'll move to supply and demand, smart money concepts, trading strategy. So this zone now is a vital zone here. Yeah. So if this market should come touch this place, we should look for a sell. Because here it's a strong zone. When the market hit here, it refused to break, it went down, went up again, did a weak refuse. So here now should be a zone for us now to look for further sell opportunity, shorting opportunity. So I don't know when the market will come hit that place. Our stop loss should be here. TP should still be around this area now, and this one should be 1:2. So this method, I don't know. Okay, but let's just use it. So you guys just have future understanding, maybe when later we get to this level. Okay. This is how we wait for trade. So the market is going to that zone. Remember, it's boom, 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 boom. It has touched that zone. Now this is a bigger M formation, a bigger M pattern. You see here, the market went up. Sorry, let's undo. Market came down. You can see the M there. I don't know what's happened to this chart. Okay, that's the first leg. Went up again. Now you see why I put it again. So we are looking for a sell here now. You see the bigger M pattern here. Double top. Here was a minor one. We entered, we scalp it. Now here again. This pattern now is showing that this trend, this uptrend is getting weaker, because in an uptrend you should see something like a lower high, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher. But now you see the market is now failing to break a particular zone now, so it's creating equal highs here. So telling us that this trend will soon change. Okay, so let's just see how it plays out now. Okay, now we have entered a trade. This is our trade sets up. So boom, we are in, and our stop loss should be around here because it's a bigger M formation now. We are risking 1 to get to, we are risking 10 now to get 20 plus our 70 here. We should already be up $100 or $90. So let's just see how it plays out. Remember, we are just using psychology level, trend line bounce, chart pattern, which is an M formation, or a W at the bottom, and M. So now you see we are in profit already. Boom, our TP hits. Whoa, whoa, whoa. This is why I prefer we start with GU first, because GU is more easier to trade. I won't talk of the moving average, explain it how it works on this particular pattern. Here we are just focusing on this thing, how will I call it? Just pure price action, the normal Jeffrey Benson strategy. Okay, but Jeffrey Benson adds this thing high and low of the week. But since this is a bigger time frame, so we'll be focusing on more on this thing. Now, don't get me confused as if we don't have losing streaks. Let's just continue. You will see if now, if this thing happened in, like, this might be a 2 days trade, 3 days, 4 days. So it's not something that you say, okay, in a day I'll hold this, I'll cash this for. It's possible though, but trading a profit, when you start trading profit, it will be more harder, especially if you had 2 losing streaks first, then 2 profits. All this kind of trade might even affect your metrics and give you some kind of drawdowns. Okay, so let's look for other trading setup. Let's do our trend line way. It's accurate. We've seen a low here, low here. You know why it's skipping like that? Because of this magnet that on here. Now we've seen another low creating happening here. So let's see. There's no clear indication here now. So let's just see what happens on the market. So we have already doubled our $100 accounts. So that's how I doubled that particular $100 in 2 days, just with 2 trades. This was the same method I used, but although that one was on gold, you understand? So gold, this is mainly the thing I use on gold because high and low does not work. So that's why I'm using only this method now on gold. Now, if you watch here now, sorry, as I was talking, I forgot to look at the charts. Okay. Remember, I draw the trend line here. What is this? This is a W, right? This is a W, a clear W here. at this trend line, this psychology level, the first leg, you come here. If you can see it well with this thing, you see it now. This is a clear W when you change it to line, a clear W. So now sniper entry gangs enter this zone. Those that are afraid enter this neckline, the neckline here to buy all the way up here. So let's shift this one. This one, we are done with this one. So we would have longed. I don't know, I was talking, I just lost focus. So we would have sniper entry here, safe entry. Let's look for safe entry for now. Yeah, TP should be at this level too, because the market has failed to break this level for a long time, and our stop loss should be a little bit below the recent low. Okay, so now you see we would have closed this trade. Now we would have locked this profit. Let's say we missed it. Okay, so let's just not take advantage of it, or let me just leave it there. But we missed this one while I was talking. Okay, so let's go. That's another level again to short from. Market has always failed to break this zone, this particular zone. So it's like a market ranging, moving up, come down, moving up, come down, moving up. So you short again, come down, all the way here. So let's look for a chart to sell again down. Okay. Yeah. We sell at this zone again because market has always failed to break our stop loss. Yeah, this will be below here. Same position. Now our TP should be a little bit below to this zone, because this trend is not longer an uptrend. Is either that the trend is about to change, or the market now, the buyers are getting weaker. Let's shift this stop loss because this one is to 4. So let's go. A bigger M here, a bigger M. Forget about this other leg. We are done with this one already. A bigger M here. So we are in already on the trade, you know. From those weak rejections up there, these doji candles and all those things, we are already inside the trade. Remember, we already waited for the trade. It's a bigger M pattern from first leg, second leg. Now, why did I say we extended our TP? Now, you know, now, first leg here, second leg. Now, what is this? This is a neckline, right? So this is a place for safer entries. So now that's why I extended this TP, because now a new neckline is here. So the market is supposed to go beyond this neckline a little bit. It might play around before breaking it, but that's where patience comes in. So we need to wait for this neckline to break through. Okay. So let's see if this one closes in loss, then we'll just close out in loss. After all, we have been winning. There's no strategy that is 100%. So some strategies are 50, some are 40. Still yet, how you use your risk management plays a big role, because that's what will guarantee you success in a long run. So now, holding this kind of trade now, your mind might be even skipping. I had profit, or what if it closes out in loss later on? So all this kind of thing, it's psychology do. So it's what we will deal with later on. Okay. So let's just let the market play out. So if it hits our stop loss, then fine. That's a ladder entry, a ladder M pattern here. You can see another little M here to enter again from there. While this one is still playing around, you enter another one. But we are still waiting for this neckline to break, because this market has been ranging for a long time, created a ladder. Now this is another neckline again that is supposed to break. So that's why I'm still holding this trade. Anyway, if it hits my tip, sorry, my Wi-Fi connection is disturbing. So this to extend. If it hits us out, it hits us out. Anyhow, still the trend line is still here. You see, it's trying to break, retest, then maybe sell from this zone. But anyhow, it's plays out. Let's just watch it. I know normal self, even myself with this player, I would have closed that, because this market is supposed to break, created another M, is supposed to break, created another M, is supposed to break, but it's still playing around. Our tip, hit our stop loss for those that still hold this trade. Let's post it. Finally, hits our stop loss. Okay, let's to bring this zone closely. This is slow. Now for supply and demand, I don't want to talk more about this supply and demand. It's a supply zone. Market came, touched. Second touch used to shift a little bit. The third one, the fourth one used to go a little bit higher. So yeah, we would have closed because this kind of market condition is not even healthy at all. Not good for someone to, because we don't hold trade overnight. So imagine this happens from morning down to evening, going to night, we would have closed. Okay, so let's just leave this one. Let's just call it an invalid trade because we will hold it. So here now, fourth touch overextension, this doji candle, this bullish, this green, two red candle, and a little M there. Yeah, this is the first leg here. This is the second leg here. This is the neckline, which is where the market is now at the neckline. So go for a sell. There's no trend line. Why I'm not drawing a trend line up here to say a trend line bounce? It's just a zone because the market has been ranging from this area here. It's been ranging. It's not clear. It's not longer an uptrend, not a downtrend, just ranging since. Okay, so we look for to short at this zone or stop loss a little bit above the recent place the week, the market week. Okay. Now we are looking for this sell. This market is changing to me. From experience, this market is changing because a market can't just start doing this in a buy trend. Now, watch this candle pattern. I don't know if you've seen this. Yeah. Whoa, what is this? Okay. From here, it's a symmetrical triangle. So we are looking for this sell down to this area now. This should be the last example we should do. This should be the last example. I'm having another call though. Should be a last example. So you should continue from this place where we stopped and do your back testing down to this 2022, sorry. So you should do your back testing from here where we stopped down to 2021. Okay, so we'll stop here. So let's see how the market plays out. So now you see another M happened here, another neckline. It's breaking the neckline. We keep adjusting our trend line. Now we see a clear break and retest here, moving average cross. All this thing I will explain later on. Moving average, this is where we stack, stack at the zone here. So if we are stuck here, is where we triple account, we double accounts at the zone here. Now you see the falling we have been waiting from here. This way is happening now. This trend line break, retest, break again, moving average cross here, where we stack, all the way now going down. So let me just fast forward it to the hits. If it hits at TP, boom. So that's it, guys, for today's back testing. I'm having another Zoom call. I'm just busy somehow. So I want you guys to continue from here. Just continue from this place where we stopped. So see you guys on Wednesday. If you have questions, just drop it on the WhatsApp group so we can just relate from there. Okay. So that's it, guys, for today's video. Okay.